Sidharth, let's take a look at how markets are set up today. We've seen quite, a strong bout of selling that came in late afternoon yesterday. And we're looking at, a lot of those technical levels being broken. On the auto index, we all know the story, for example. So many stocks now trading below multiple moving averages and at multi-lows. What's your sense, Sidharth, in terms of, whether or not you expect that level of selling to continue today?
Yeah, good morning. So we have been cautious on the overall market for quite some time. That is mainly because of the poor fundamentals. So while we were all cheering index at all-time highs, the underlying earnings growth was something which was elusive. And Q1 has clearly come out as a dampener in terms of the earnings recovery expected for FY20, where not only the results are mostly either in line or lower than expectations. The management commentary for the next 1 or 2 quarters, the outlook has been a bit cautious, where most of the management do hope for a recovery from the festive season, that is of Q3. Till that time, the Nifty valuations closer to 20 times, a lot of domestic cues which are pointing towards continued pressure in the market, so that makes us a lot cautious. The budget didn't help either to improve sentiments. To add to it, the FPI surcharge, super rich surcharge added to the woes for the market, which led to almost 12,500 crores of FI selling in the month of July. And we have seen the index now correcting almost 5% for the month of July, which was the pain that was seen in the broader market. And now I think the Nifty is also reflecting the ground realities of the economy.
Okay, that's the take coming in on the overall market. But Sidharth, let's also get in a view on Tech Mahindra. Given the fact that they did come out with a fairly okay set of numbers, the brokerage community still continues to remain fairly gung-ho, saying that the deal wins will translate into a smart recovery. What's the pecking order in IT?
Yeah, so Tech Mahindra results have been a mixed bag. While the top line growth has been pretty steady, that is something that we have seen in some of the other tier 1 IT companies as well, mainly on back of the strong deal wins that they have been witnessing. However, the big miss was in terms of margins, which declined even more than we were expecting. Generally, Q1 we see a lot of wage hikes and that impacts margins, but apart from that, other operating costs have also inched up, and the entire thought process where the management had guided for a big improvement in margins on back of operational efficiencies is now getting nullified by the increase in some of the cost of employees, the visa cost, and to that extent the growth looks muted for at least 1 or 2 years. The good part is the top line growth is pretty steady, valuations are comfortable, hence a positive view on Tech Mahindra. However, if you see the top pick in the sector would be Infosys, where again the top line growth is pretty strong, the margins decline is pretty controlled, and valuations again very comfortable compared to TCS, which is the market leader, followed by a Tech Mahindra in the IT space.
All right, that's the pecking order coming in when it comes to IT. Sidharth, would like to get in your view with what's going on in telecom. It continues to remain a tight 3-legged race, although we've seen Vodafone Idea bleed relentlessly on the back of the 4th straight quarter of those mounting losses. Bharti Airtel, some glimmer of hope. Jio now has gone ahead with a $1 billion fundraise. How do things look within the space? What's your preference?
Yeah, so telecom sector has been in limelight since the time Jio was launched, and the entire strategy of Jio regarding low pricing and penetration. So they have been successful in getting the market share. Now the market hopes for some stabilization in the ARPUs. We have seen, at least in Vodafone results, that ARPU have increased 4% on a sequential basis. The major issue was the churn in the subscriber base, as well as the high debt that is impacting the overall business. So in that sense, we have seen that Bharti Airtel, at least to that extent, have been better prepared with its global businesses, as well as the monetization plans for some of its global assets. Although we are positive from a longer term view on both Bharti as well as Vodafone, we believe the best play in an indirect way would be a Reliance Industries to play Jio, and followed by Bharti Airtel, while Vodafone Idea do look at comfortable at least for 3-4 quarters with the cash infusion of the recent rights issue, but the way they manage the cash flows and the debt over the next 2-3 quarters will determine whether they can still sustain the competition.